Good morning, everyone. Welcome to our Tuesday morning trading session. One moment here as I get you my monitor. The market's opened a little bit lower today. Not a big surprise after yesterday's very sideways kind of trading day. I think a lot of people have been expecting the stock market to tail off a little bit. All right, here in the hawk, we are getting a 4-arrow consolidation signal, and let's see whether or not we can take advantage of this. Can I risk it up there? Yes, I could. It's early. It's the first signal. The last couple of times out, I've kind of missed the initial move, so we'll see if we can do a little better this time. We just hit our break-even trigger. And you can see I gave the market lots of room to sort itself out. No, they only gave me break-even. I almost thought we were going to see the market move right out of the gate, but I guess not. It was worth a try. At least we only got tagged at break even. Thank goodness for those break even triggers. I don't know why I didn't use those before or use them more before. Well, let's take a look now that they're resetting themselves a little bit. Let's take a look at where we've been, where we're going. So the market closed up yesterday somewhere around this 44.80 area. And after that, it hit the skids. London open, market keeps declining. We got some tradable signals through here. Nice progression to the downside. This is going to look like a little bit of an opening gap to the market this morning. And at the moment, it looks like we might be trying to fill that gap. Now we're getting a trend change signal, or possible trend change signal here on the Falcon to the upside. Remember, the trend change signal, fairly easy to spot. The trend line changes color. We get this up, down, up pattern. And of course, it's all still very early in the trading day. Oh, they are going to give us the signal here. So the signal is going to print right here. I know that from my logic counter. My handy dandy logic counter. I don't know if I want to. Let's see if we get a second push on this one. All right, so we will. It looks like we'll get a second push. I can cover below these lows, which is nice. And we're right up against these highs now. Michelle is asking about the break-even trigger. Do I initiate the break-even when I hit my first profit target? No, Michelle. I think on the hawk I have it set at 8 ticks. 1 second, we'll take a look here. So the break-even is set at, yes, 8 ticks on my hawk. So I guess did we reach our profit target? Had I just gone all in, all out? Yes, we did. And you see, that's what I get for trying to put a runner on there. I could have put $100 in the bank. Oh well. And the Falcon, the break-even trigger, because this is the NQ and we have a 20-tick target, I think I have it set at 15. Now this is a little more than a little risky trying to buy into such a strong downtrend. I'm being a little bit cocky this morning. You know that normally I don't fool around with the market so much right out of the gate. So what I'm looking for, this is the decision bar now right here. See, we've broken up, we've broken the high, the sellers have forced the market back down, so here come the buyers. If this bar fails, then I'm on the wrong side of the trade. So what I'm going to do is I'm going to enable a more aggressive stop strategy, like the bar high low. And it's going to follow the market up now bar by bar. Get up there, because this is really the last chance for the buyers to pull this off. If they get knocked down again, well then I don't want any part of this. There we go. We hit our break even. Come on, get up there. Oh, you stinkers. Scoundrels, get up there. Ooh. 2 for 2. 2 break-evens in a row. Oh well. It was worth the effort. It was worth a try. Okay, so just a little bit of a review here. We had our trend change signal. Now I know this is a high probability signal, so I want to do something with this. I chose to enter off of the next bar. I chose to let the signal trip. I suppose I should have taken it here on the hash mark, because when you're this close to the swing high, chances are very good that if you get filled here, you're also going to get filled here. But I took it up here. I covered down here near these lows, and that was intentional because this is a significant swing point. When the market breaks above there, I'm going to expect some sort of reaction. I don't want to have my trade framed so tight that I get brought or taken out on the reversal. Okay, do you understand? This is an important swing. We've made higher lows. This is our first higher high relative to the others. You see? I'm expecting some sort of reaction now. So here comes the reaction. Here come the sellers. Now, I don't know how deep the sellers can push this market. That's why my stops are way down here. For all I know, the sellers might end up driving the market all the way down here, right? I don't want to get tagged too early. So I do know if they trade back below these lows, well then I'm definitely on the wrong side of the trade, and it's time to get out of the market. But at this stage, I don't know how strong the sellers are relative to the buyers. So I want to give myself some room. So there comes a little bit of buying. Here comes some more selling, a little bit of buying. Now all of a sudden, the buyers are making some progress. And it's more or less in line where I would have expected them. We have a trend line in that neighborhood. So now that I know where the buyers are coming in, I can take my stop from down here and I can start to bring it up here. Why? Well, because the buyers have shown me where they're prepared to buy. If the sellers knock them back down below this level, then the sellers are obviously stronger than the buyers. And it's time for me to go. It's time for me to say, oh, wrong side of the trade, time to get out. So this is why I went with the bar high-low strategy now, because it's more aggressive. It's going to roll bar for bar or whatever I set it to. And it gets me stopped out at break even. Hit the break even trigger, gets me out of the trade. Now, I'm just curious, had I taken the trade on the hash mark, would I have found the target? Oh, look at that. They came up just a tick short of the target. Now look at what happens when the sellers knock the market back down below this low. All right, we're looking for the buyers to step up now. And no doubt there's some buying support going on right here. We've got some buyers looking at this trend line saying, yeah, okay, we'll support it down here. 44.54 is a good deal for us as buyers. Think of yourself in the supermarket or at the service station. You know, if you all of a sudden go past the service station and you see gasoline is $1 a gallon less than it was yesterday, or 20 cents a liter less than it was yesterday, do you think maybe you're going to make the effort and pull over and fill up even if you have half a tank of gas left? Yeah, probably. Why? Because you recognize it's a good deal. So the buyers are digging in on the lows. We do have a trend change to the downside. What we're looking for now is the reaction by the buyers, and it's coming at these lows. And if the sellers can knock them down again and print a signal, then we will have a tradable trend change to the downside. And that's what we do over and over and over. Had a nice green bar sell here in the Eagle while I was chatting. So we encountered the hard edge. Notice how this looks very much like a bear flag type formation. That's what we like to see. Those types of retracements lend a lot of strength to the signal. See that? 3 very good green bar sell signals. All right, let's see what happens now as we're hitting those lows. Thanks, Jim. Jim says the advanced decline is pretty much even up. 1,400 to the good, just about 1,300 to the negative, so that is very neutral. We are getting a macro pullback signal here. I am a little leery because of all the sideways action we've encountered, but it is a macro pullback. Let me reduce the risk on that. I'll cover it up here. We're getting the opportunity for a second push on this entry also. Well, our macro pullback has now moved into yellow bars, so let's cancel that. We'll see if that builds into a 4-arrow consolidation. Our Geiger counter has moved a little bit into bullish territory. At least for a little while there. Our trend indicator also green. That's this little envelope that you see around the last bar. Okay, we're going to get a with trend signal here on the Eagle, and we're going to get a corresponding signal here on the Falcon. Now the Eagle, we're against the ATR, you see that? So what I'm going to do is I'm going to use Mike Filigera's little trick, and I'm going to trade on the other side of the ATR. I can either wait for the bar to turn over entirely. In fact, why don't I do that? We're going to let that bar trade through the ATR. Okay, and now you see the next bar. I can tell from the logic counter it's going to finish down there. And we're getting another first micro macro cross here in the hawk. So a lot of market pressure to the downside at the moment, but no follow through. Oops, I can adjust my first micro macro cross signal here somewhat. So here's my first micro macro cross. Again, a lot of yellow bars, these clusters of yellow bars, not making me real happy at the moment. No, we're going to feel a little heat here on our hawk trade. So same thing, I'm going to watch for the sellers now to show their hand. Give me a bar moving lower. These wicks are encouraging. There we go. Okay, so now I can go with a more aggressive bar high-low strategy. Or I didn't even need to worry about it. It took me to break even. And perhaps I'm debating whether I want to go with the parabolics. The parabolics a little bit more efficient at holding us into a position for a longer time, or maximizing our, sorry, that's not true. The parabolics, I'm thinking of two different things. I don't multitask well, just ask my wife. The parabolics more aggressive at taking us out when the market starts to weaken. Right now the parabolics and the ATR are pretty much in sync with each other. And I'm debating whether I should try to hold on longer or whether I should max out my profit. I'm a big one for maxing out my profit. All right, let's go with parabolics. There, made the decision. Right or wrong. There we go. And I think we just hit our profit objective on our Eagle trade as well. Hooray. Did we? Yes, we did. How nice for us. And it looks like we're about to get tapped here on our hawk trade. Not bad for just a onesie. How did we do there? Oh, fantastic. Well, thanks for joining us this morning, folks. I hope that you have a nice rest of the day. Time for me to go back to bed. Maybe phone, see if I can get a tea time later this morning. My only regret on that trade is that I did dial down my risk exposure. I dialed it down to 1% instead of leaving it at the 2%. I could have had 2 contracts in play there. Oh well. How terrible. How terrible. I only made $200 instead of $250. Our Eagle trade, let's review that. That was our signal right over here. So we were against the ATR when the signal printed. Now this is a little trick from Mike Filigera, and I admit I like the way it works. We're using the ATR as a filter. If you don't know how to put the ATR on your Eagle, you can do this with any of your tools, really, whether it be the Hawk, the Falcon, the Eagle, the Raptor. I try not to put too many things on. However, I admit that I do find this one useful, and that is always the deciding factor. Does it help you make a decision? Whether it is right or wrong, believe it or not, whether it is right or wrong, that is secondary. We are looking as to whether or not this will help us make a decision trading. So go to your IW assortment of indicators, and you're going to notice these down here. IWTM ATR trail. These are all your trade manager strategies. So you can actually use anything. You can use your ATR, you can use your chandelier, you can use your percent, your super trend, whatever you like. The ATR is pretty good. Just double click and you're going to see that it shows up right down there. Default settings are fine. Click apply and OK. And then you're going to have the squiggly blue and red line. Now the way Mike suggests to use it is, well, simply as a filter. You want to see the market in sync with your ATR. So currently we're out of sync. This bar right here flips the ATR. Oh, almost hit it right on the nose. Okay, this bar here flips the ATR. So now we're going to look at selling below this bar. Now notice the Eagle reset the signal, and we also got another signal right there. So one way or another, we were selling below there. And then the market just went boom, 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 all the way down. Hit our high probability target, and now we're starting to reset a little bit. I don't know if we're going to get a big move to the upside out of that. But I think it's definitely a seller's market today. Here is another example of using the ATR. So we're printing a signal. We're against the ATR. Now we are in sync with the ATR. So you would use this bar that flipped the ATR over as your entry. And voila. Notice a little while later you got a with trend signal a few ticks lower, which tends to happen as well. You see here was a green bar sell against the ATR flips over. A little while later you get a with trend signal. Here's another one. The green bar sell against the ATR changes over on this bar. You could use that bar as your entry. What that does is it sometimes helps keep you out of a wandering market. Let's see if I can find an example. Now, all these signals have been working out. I can't find one that failed. Darn eagle, you're too good. Okay, here's a potential one. Now, it's hard to say without the logic counter exactly how this finished. But here's a with trend signal, but we're against the ATR. This signal flips the ATR over. Our logic counter is probably printing somewhere up there. So we're going to look to enter above there. Now, by doing so, very often it keeps us out of this type of scenario, where the market is not truly committed yet, and it ends up going the other way. So this is the reason I've adopted Mike's methodology for using this ATR, is a lot of times it will keep you out of these uncommitted markets, out of these false signals. Now, honestly, this one would have been tough to decipher, because looking at it right here, the whole time I'm wondering, are these my tests of the extreme? Is this, evidence that the market is bottoming out and it's now safe to buy? Or am I going to expect another proper test of the extreme, something a little bit more textbook, before the market can rally? And of course, it turned out to be the latter. We get the breakout. Here comes the test of the extreme. Oh, and a subsequent, oops, wrong button, sorry, and a subsequent failure. All right, so there was the test of the extreme. The buyers tried to rally the market again, but it was not to be. They were not able to muster a trade here. The sellers knocked them back down, and then we get our with trend signals developing. So that would have been a very difficult signal to decipher, but by using the ATR as a filter, entering above your logic counter, hopefully you would have been able to avoid this reversal here. I know some people like to split hairs on their entries and exits. I get people writing me all the time, Eric, how many ticks should I enter above or below the hash mark, or above or below the swing high or low? It's not that refined, folks, really. It's not. I'm usually in too much of a hurry, to place an order. If I see a signal here, this is a 1, 2, 3 arrow consolidation so far. If I'm looking to place a 4 arrow consolidation order, this is not a signal. I'm showing you something here. If the signal prints, I'm usually in too much of a hurry to say, oh, well, okay, there's the low, 1, 2, 3. That's below the low, that's above the high, that's close enough. Right? One tick will not make a difference. Or one tick will rarely make a difference. And we are getting our 4 arrow consolidation signal now. And Jim's going to tell me here in a moment, Eric, don't do it. You're at the 7 a.m. low or 10 a.m. low. And he's absolutely correct. Let's take a look here. That is a strong signal, and I am going to debate taking it here in a moment. But in a second, we're going to see Jim's handy-dandy first hour indicator print the lows right here. See, there it is. There's that little green line about to print the low. And here's the high of the session. Now, I think we are in a bear market today. remember too that trading is a lot about probabilities, right? You don't want to, this is a high probability signal, 4-arrow consolidation. 4-arrow consolidations typically look like bull flags or bear flags, and a bear flag is simply this pullback move against the trend. A bull flag would be the opposite. It would be a pullback move against the trend. And if we get 4 arrows printing in here, we tend to buy the 4th signal. Sometimes the 4-arrow consolidation will print sideways. The idea behind a 4-arrow consolidation is that it is a consolidation pattern. The market is uncertain what it wants to do, whether it wants to go higher or lower, and therefore it begins moving sideways or pulling back, as in a little bit of profit taking. In a strong market, the buyers and sellers will never allow the latecomers to buy or sell at the same price that they did. So the sellers who were selling up here off of the highs are never going to allow the latecomers, namely us, to buy in at the same price that they did or sell in at the same price they did. Now I'm endowing the market with human characteristics, but the fact of the matter is that is how it works. Whether or not that's the reasoning behind it, who really knows? And honestly, who cares? It doesn't really matter. But that's why we get these 4-arrow consolidations, we get these consolidation patterns, and we get second opportunities to get in, albeit not at the same price level. We expect these to make lower swing highs when we're in a downtrend. So here we are in a 4-arrow consolidation. We're printing our 4th signal right here. It's decision time. I kind of avoided this decision, but the question is, where do I want to cover my trade? This is the hard part about this particular trade. Do I cover above the top of the trading channel? I've already dialed down my risk amount. Do I cover above this little swing high? You know that I try to cover as far back as I can, right? It makes me a little bit more comfortable knowing I have some room to move initially. I could try to cover above that swing high. I should check my ultimate support and resistance suite to see where the lines are. So I can't cover up there, not at 1%, that's too far. I could cover above here. So the market brings me in. Oh, looks like I would have been all right. We would have at least hit our break even. So I was concerned over nothing. Now, you don't want too many 4-arrow consolidation patterns printing in a row. Like, there's no such thing as a 10-signal consolidation pattern. 1, 2, 3, 4, 5, 6, 7, 8, 9. Yeah. There's no such thing as a 10-signal consolidation. And you should be concerned if you see consolidation, consolidation, consolidation. Why? Well, there's no momentum there. Ooh, big swing in the advanced decline. Thanks, Jim. Advanced decline went from slightly bullish to fairly bearish. We're about negative 800 right now, folks. And all that means is that on the New York Stock Exchange, there are a lot more people selling stocks than buying stocks. So if you're following the Russell or the NASDAQ or the YM, they should very much be in a downtrend also. So now I'm just looking for another spot to get into the market. And like I say, the hawk, these signals, they may work out, but this is just a little bit too stale for me. There's too much activity here and not enough follow through. Well, let's snoop around a little bit, see what else is going on. Crude oil. Well, it is Tuesday today, isn't it? Crude oil, after a huge run up in the overnight, my goodness, that would have been worth staying up for. Look at that, a textbook trend change signal right here. Yes, we got in a little bit late, but really? Look at that. Are you going to argue? Huge, huge move in crude oil. And now we're going sideways. In fact, we've made a lower swing high relative to the high here. This could be our test of the extreme. We won't know for sure until we either get a trend change signal or a violation of these lows. So it looks like 60-20, a definite area to contend with. And if your service stations are anything like mine, they're already hiking the price of gasoline. Never mind that it's crude is trading at half of what it was 4 or 5 months ago. They've decided to put the price of gasoline back up to where it was when crude was trading at $100 a barrel. I guess somebody's corporate jet needs an engine rebuild. Really? Is this where they're going to dig in? Geiger counters are all over the place too. See when the histogram hits the bottom down here? That's suggestive that there might be some stop running going on. That they're trying to, and that would have been these lows here, that they're trying to tap out the weak sellers, bring them in, run them out. We'll see now, the histogram took a little bit of a loop there to the upside. We're certainly not bullish yet. Now, we don't, well, actually I should have considered this one here. I was going to play around with the soft edge buy and sell, the potential counter trend signal on the Raptor. It occurs in this kind of situation where we encounter the soft edge and we anticipate a retracement to the hard edge. This one's actually relatively easy to spot because we have our test of the extreme, don't we? Whenever you see that failure, that's a heads up that you know which way the market's going to go next. It's a great little parlor trick to impress your friends. If your friends are anything like mine, as soon as they find out that you're involved in trading, all of a sudden they start shoving all these penny stocks they've bought in front of you, all these charts, saying, Eric, is it going to go higher? I don't know. But if I see a test of the extreme, I can usually tell you that it will go higher or lower based on which way it's swinging. Don't tell them that, though. That'll be our little secret. Yes, amaze your friends. All right, the Geiger counter very red now. So that could have been just a little bit of a, like I said, a little bit of stop running, initial stop running, a little hiccup. Kind of a wild and crazy sort of day right now. So I was just waiting perhaps for that soft edge buy opportunity. Oh, are you guys serious? First micro macro cross. Oh, well, it's a high probability signal, right? I do have a chance to enter on the second push, or I did have a chance to enter on the second push. Oh, and they've taken away all temptation. Oh, now they're coming back with a red bar buy. Come on, get down there. Make that little green dot disappear. Okay, there it goes. Good. I didn't have to worry about it. Okay, first micro macro cross. Somebody is going to write me and say, Eric, you said first micro macro cross signals are high probability signals. How come this one didn't work? Well, why do you guys think this one did not work? Why would I have structured this a little bit differently than taking it right on the hash mark? Anybody? I'll wait for you to type, for you two-finger typists. I've been talking about it most of the morning. I won't. Oh, very good, Micah. Micah gets top marks. You get a gold star, my friend. Test of the extreme. No test of the extreme yet. Can the market rally off of that first micro macro cross? Yes, absolutely. But not having a test of the extreme means that if I'm going to take it on the hash mark, I got to risk it right down there because the market might choose to go lower, right? And so long as it stays above these lows, I'm okay. If it violates those lows, I'm definitely on the wrong side of the market. But here's the problem. I don't know how far down it might want to come. I have not had the test of the extreme. So for that reason, I might want to set this up a little different. I might let it trip like as it did, wait for a second push on the entry, or perhaps enter above the high of the logic counter on this current bar, which would put it somewhere around there, or even enter above the high, this little swing high, anything to try to keep myself on the right side of this trade. Don't bring me in unless you're really sure you're going to head higher. Then, of course, it retreated, and here we are with this mess, once again, this little cluster of yellow bars, this sideways action. Like I say, this first micro-macro cross might still work. It looks like we haven't been stopped just yet, but you would definitely have to have your stop below there, wouldn't you? Look at how it attempted to run your stop. The buyers dug in. The sellers are digging in. Here come the buyers again. I'm afraid that I would be running my stops right below here now, right? This is the last effort on the part of the buyers. So I'm rolling my stops higher bar for bar. If there's a failure here, well, you might as well take me out because the sellers are going to regain the market. So let's see if we have corresponding signals. No, not yet. The Falcon is working on a trend change signal. Okay, so we're getting a possible trend change signal here on the Falcon. We have our down, we have our up, we have our down. And this is one of these trades where it's a matter of logistics, right? Oh, here, I want to take this signal because I do believe this has potential. So you could have entered it here for the sake of a couple of ticks. Well, here, we'll let this trade play out. I've delayed my entry by about, oh, it looks like by about 4 ticks, which is not ideal. Come on, get down there. This is a major low. There could be a reaction here, which is why I'm trying to keep my stops further back. Get down there, come on. See, it's always a debate whether you should delay your signal or take your signal on the hash mark. By delaying my signal, I've made it more difficult for the market to even find my break-even trigger. Come on, get down there. You stinkers. I'll show you something else here that is a little, I don't really want to say concerning, revealing maybe. This will be easier to do on the Eagle. What I'm trying to demonstrate is, do you see how the market is starting to get a little bit shallow in its moves? Okay, so the sellers have shown that they're digging in right here, so it's going to be time for me to, why is my bar high low over there? I want my bar high low right there. This is the last chance now on the part of the sellers to get serious and move this market lower. I'm not going to put up with them if they can't take the market below these lows now, then it's probably time for me to go. So you see we're getting a little buying reaction here. We had some selling reaction there. Get down there. Come on. Come on. pull it down with the mouse. Sometimes that helps. Come on. Come on. Here we go. Come on. Pull it down. Let's go. I am being obviously more aggressive with my stops. I could run it above the trend line there. That might be a little bit safer, but the way this bar is waffling, that tells me that this is a decision point for this market. Come on, one more bar. Oh, you stinkers. Get down there, just give me one more bar. Please, please. When all else fails, you can try begging. All right, so let's see now whether or not this trend line held. Maybe I did get myself tagged a little bit too early. This will be a note for the journal. Right on that support line. I really thought this support line was going to yield. Okay, so the trend line did not hold, so it was just as well I took my medicine earlier rather than later. And now we have a lost market again. I'm looking here on the Raptor. Did I get a soft edge buy? I did, and I had the test of the extreme too. See the little failure here, the soft edge buy signal, right back to the hard edge. Very bullish now on the NQ. Look at our histogram, all buyers, no sellers. So that one, that accelerated in a vacuum. Right? There were no sellers to pick up the other side of the orders, too many buy orders, boom, 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 keeps going up. And of course, now we're getting that first micro-macro cross signal. This is very much counter trend. Lots of yellow bar clusters. Right now, the way this first micro-macro cross signal is if I take it here, I'm looking at risking it probably somewhere down there, because this may very well develop into a macro pullback signal. It just tripped. What I could do is I can use my logic counter and enter above the high on the logic counter of this trigger bar. Now we're going to try to work ourselves into a macro pullback. The ideal place to buy is actually above the high, above the swing high. Oh, now we're getting a green bar sell. So little mix up among the signals. All right, this is for demonstration purposes, folks. I'm not sure. Oh, it's running away on me now. Well, here was the macro pullback signal. Not the most inviting signal given all the yellow bars and such, but it is a macro pullback. It does tend to be a relatively high probability signal. So it looks like we would have at least found our first profit objective. You can see we're doing a test to the extreme right now. I heard some long signals print. Oh, we're getting a trend change signal here in the Falcon. So we could take that above the highs. This has been a very popular number for this market. This whole 44, everywhere from 44 to 35 to 44.40. If you remember, we've been running into 44.40 for a few days now. Well, sorry, not yesterday. Yesterday we were trading way up here, 44.50 and such. But the day before, 44.40 was a fun number, a popular number. And I think what I'm going to do is I'm going to enter just on the other side of my resistance line and cover there. So looking for a little bit of a pop to the upside, maybe. This trend change signal, I'll leave the order. Well, actually, it doesn't matter. That's why we're in the room. This order here, okay, now you see to enter above the high, look at how many ticks I have to give up relative to the hash mark. Right? If I enter on the hash mark, and let's say I risk it down here even, I'm giving up, well, at least a third, almost half of my profit potential before I even gain entry. This is the kind of situation where you're just going to bite the bullet, take it on the hash mark, because if the market gets up there, it's going to be that much easier to find your profit objective. And look, you can even be in a position now where if this market moves against you, you can take this trade to break even, or even just take it below here so that you minimize your risk exposure. That is the ideal trade. By the time I saw it, it was already up here, and you can see the problems that we're encountering trying to structure a trade this late after the signal. It's not to say it won't work out, it's just that, you know, now we're doing a little bit of hand wringing, a little bit of humming and hawing. You know, should I roll my stop? Should I hold my stop? Should I have placed my stop deeper? What should I have done? I think we're still going to see it move here to the upside, but you can see the problems that we're encountering. Whereas with the earlier entry, we would certainly have, well, not less money at risk, but it makes it a little bit easier to negotiate the trade. So for instance, if we had entered here, had our initial stop down here, we could have at least rolled our stop to here by now. That would have cut our initial risk in half. And now we would be looking for the sellers, or pardon me, the buyers to pick it up again, and now we would start rolling our stops bar for bar. but very much a counter trend move. I think the safer trades are on the short side today. I do have a tendency that if one side of the market has paid off, I tend to stay with that side of the market. Don't go flip-flopping on your trades. All right, so here's an eagle signal. Oops, sorry. Here's an eagle signal. Our ATR has turned over, so now I'm going to use the logic counter, enter below the low of that bar. And hopefully this will keep me on the right side of this market. If this bar trades lower, it's going to flip my stop strategy. I'll tell you though, after this big move lower, like honestly, if I'm only in the room now for you guys, if I started the day that way, I think this has been, well, it looks very much like the move of the day. Where's my day ranger? Let's go see what the day ranger says. Oh yeah, see the day ranger, we're 216 ticks. We're above the average already for the 5, 10, and 30-day averages. So I think Neil was asking this the other day. What happens when we've reached our daily average? Do we expect the market to reverse? Well, you can see we're getting a lot of yellow bar clusters here, a lot of waffling. Okay, so the Geiger counter has gotten a little bit more bearish again. That's encouraging. I'd like for this current bar obviously to turn red. There we go. Now I can enable my stop strategy. And hopefully this will at least get me to a break-even position. I'll be a little bit more conservative with the stop. Come on, just give me that break even. You see this bar here with the wick? I could roll above that, my stop. That shows that there was a little bit of a battle between the buyers and sellers. The buyers popped it up just a little. Come on, get down there. If this bar closes here at 44.28, we should be all right. Get down there. Come on. There we go. So you see how this one has a little bit of a larger wick on it? That's suggestive that, again, there was a struggle going on here. The sellers won the battle. The buyers obviously going to dig in on the lows. Whether the buyers swing it here or not, I can't tell you, but we're at break even, so it doesn't really matter. Okay, so maybe the buyers are going to swing it here. We have had the test of the extreme. Let me see, had I taken that on the hash mark? I'm just curious now. No, still short of our profit objective. All right, well, the buyers holding the line for the moment. Now what happened to that selling? Saw the Geiger counter down here, pushed the market lower, now all of a sudden the selling has dried up. Let's see here, Jim says the YM on the Raptor. A yellow bar, sell long. He's up 10 ticks on it. So I think it's 66.76. Is it this one here, Jim, that you're looking at? Unfortunately, Jim has a disadvantage, or has an advantage over me, because he's the one who's eyeballed these yellow bar patterns. So it's a yellow bar sell that failed and is rallying. Or is it this one here that you took advantage of? Very sideways at the moment, though, regardless. Oh, the newest one, Jim says. So let me bring that back. So yellow bar sell signal. It failed. So he's... Oh, I think, Jim, you like to buy it right on the hash mark, don't you? You're pretty aggressive with those, if I remember. In which case, very bold move, my friend. That is a nice trade. So we're back inside of the trading range on the YM, in the lower third, but still in there. Let's see where we are on the NQ. The NQ still hovering on the bottom end of the trading range. We have had something resembling a test of the extreme now. We'll see. This could be a double pullback into the hard edge. If it comes out of here with a sell signal, that would be a good sell signal on the Raptor. It looks like it might be working its way toward that. Oh, there it is right there. Oops, I gotta set up my sell. Remember, if you're using your Trailblazer, these orders are live the moment you put them on your chart. And now the market's gotten a little bit too far from me. I should have been better prepared for that. Just a little bit of feedback on Jim's sell or buy order here on the YM, which he bought right here. He says he's found that you need a 10 tick stop. Most times prices will go no lower than 8 ticks. Wow. That's great. Pick up a little short-term upside move. Well done. Oh yeah, look at our Geiger counter tanking now. Okay, we're getting another sell signal here on the Eagle. So our ATR has turned over. We're back at the lows. You probably want to cover above the highs. And same thing, you know, we're not going to split hairs here. If it's below, it's below. If it's above, it's above. That's close enough. And again, this is more of a demonstration type trade. My concern is that the NQ has come down a long ways already. It is very much a bear day today, though. Oh, and we had a first micro-macro cross signal here. No, they're not going to give me a chance to get back in on that one. So there was a first micro-macro cross. I probably would have set it up something like this. And you can see that we're trading near the lows, so that's okay. We violated this little swing low. Looks like we would have at least hit our break-even target by now. Maybe even pick up a bit of a runner. Geiger counter full on red, that's good. Let's see if we can't get this trade to at least a break-even point. Did they slip me? No, I guess not. Okay, come on, sellers. Let's see some follow through now. So once again, we've violated a major swing point here, a major support area. Well, major. It held the market for the better part of a half an hour. We can anticipate some sort of reaction here. Once I get that reaction and I see where the sellers are prepared to come back into the market, then I can get more aggressive with my stop again. Oh, come on, you guys, play nice. All right, so here come the buyers. Here's crude oil for a moment. We're getting a with trend signal here on crude oil on the Eagle. Can I cover it below the lows? No, of course not. Why would I? Why would I? This is crude oil. Oh my gosh, I can't even cover it to the ATR. Oh, I should be looking at mini crude again. 1 second here. Let's do the mini crude. All right, here's the mini crude market. We've got the triangle. We haven't printed the hash mark just yet, but it's essentially the same signal. And can I cover it to the hard edge? No, you guys, you're killing me. Can I cover it below the swing low? Yes, I can do that. So there's mini crude for you. Okay, big blow off here in the histogram on the Geiger counter. Starting to see a little bit conflicting signals here. Our hawk looking a little bit more bullish. Mark's asking a little bit about the Geiger counter. Can I just review the components? Sure thing, Mark. The Geiger counter has got 3 components to it. First, it's got what they call the dial meter, which is this red-green line that swings around. That's a visual of the bid and ask. So you can see right now the sellers are stronger, right now the buyers are stronger, and it keeps flip-flopping back and forth like that. Here to the left, we have the histogram. This is the history of the bid and ask. And when you see these spikes like this, sometimes they're indicative of the market running stops. So it would be looking for, buy orders here that aren't really there. Bring in a bunch of buyers, then reverse the market, essentially, is the logic behind it. The needle plots an average of the buy and sell orders. And you can see when the market gets especially strong, the needle will turn green or red, and when it's relatively neutral, it will stay white. So right now, this is saying that there's a lot of buying pressure going on in the NQ. And Mark says, I mean the one by the bar by the logic counter. This is also part of the Geiger counter. This is called the trend indicator, and it gives you sort of a snapshot of all this going on up here. So when it's green, it's very bullish short term. This is much more of a short term bias. So I guess it's there to lend some confidence into a buy or sell signal. So let's say right here, the Raptor generates a buy signal and you get that green envelope, this green trend indicator. That might suggest to you, yeah, okay, there's some strength there. Or here you're getting a sell signal and the bar had the red trend indicator around it. You might feel a little bit more confident taking that sell signal. It's a short-term bias on the market. So you can see right now things very bullish looking on the Geiger counter. And I'm looking for the market here to give me some sort of sign that the sellers are actually stepping up, and then that will be my cue to start rolling my stops. There we go. So this is now the last chance on the part of the sellers to regain this market. If they can't do it from here, then I'm probably on the wrong side of this trade. Okay, come on, you guys. Come on, sellers. Very conflicted. See, Geiger counter, the bid ask, bearish, very bearish in fact. The needle turned red. Trend indicator still green. Falcon starting to look like a roller coaster. Woohoo! Up and down and up and down. Early trend change signal here to the downside on the Falcon. I don't know if I'd want to actually throw money on it, but it is a sell signal, which is oh, nicely done. Michelle says she just got in on the Japanese yen trade. Oh, that's our position trade. Oh, fantastic. I wasn't even paying attention to that this morning. I checked those later. Good news. Thanks, Michelle. Frank is asking, would a time and sales chart give similar information to the Geiger counter? Well, yes. 1 second here, I'll pull up a time and sales for you, and you can see. So here's our little time and sales grid. And let's pull the NQ up here. There we go. So here's the time and sales. Oh, here, let's do it like this. Here's the time and sales, and here's the Geiger counter. Which is easier to decipher, right? It's the time and sales is useful, but honestly, watching the onesie twosies go by is not, I don't think, is very helpful. So what a lot of people do is they'll say, well, let's throw in block alerts, and let's only see those trades that are trading at more than 5 or 10 or whatever. You need to adjust your block given the market. So here we'll set a filter size of 5. So now we don't see any trades that trade less than 5. Do you find that helpful? This is the problem with the time and sales. That's why they developed the Geiger counter. Okay, so there's a bullish 5. Everybody who's trading 4 or less, we don't know what they're doing. So it can be helpful to watch the time and sales. It can also be, well, honestly, it can be a waste of time. So there's another bullish order. And by waste of time, I mean most people are going to be watching the time and sales like this. And that information in itself is not very helpful. Unless, you throw in an order for 3 or 4 or something odd, you get to watch your order scroll by. Sometimes that's kind of fun. Of course, you'll never know yours, the onesies, if you're just trading onesies. But to answer your question, Frank, yeah, that was the logic behind the Geiger counter, is to give the time and sales a graphic interface so that it makes it easier to interpret. If you guys are interested in the Geiger counter at all, Adam has a promotion going on this week. Today is his birthday, actually, if anybody wants to send him a birthday wish. But his promotion for the Geiger counter is, I think it's 20% off. And in the coupon, where it says coupon code, you would enter the coupon code 49 years. Adam is 49 years old today. Mo is asking if I follow natural gas at all. Not usually. I pretty much have my hands full with what I watch, but I'll pull it up here for you guys in a second. We'll just let this trade either close. Well, we'll let this trade close out here, because as soon as I move away from it, oh, I know, I can put natural gas up here. Okay, let me get the NG. And yes, you are correct that natural gas can have some very nice moves to it. Oh, Jim, you're a character. Jim just saw Adam's picture. He says, "Oh, I thought I looked old." Yes, poor Adam. Phil's asking, what's the advantage of the histogram on the Geiger counter? Well, it just gives you that visual history. So you can see, okay, big selling pressure down here. As I said, sometimes it shows you if they're running stops. I can't dial it back for you, but we did see, a lot of buying pressure right here. The histogram made a spike, a bit of an isolated spike, which would suggest that there was some running of stops or sellers trying to run the buyer stops before they ran the market down. So we had a little move lower. And now I heard that I just got tagged on break even, or sorry, not a break even, tagged for a small loss here. But if I were still in my Eagle trade and I was watching my Geiger counter, and my Geiger counter is making a little bit of a bullish slant, that would tell me that, all right, Eric, it's time to get more aggressive with your stops. The other reason for the Geiger counter, I think it was actually, it might have been Scott, who, I think Scott is in the room this morning. If you are, kudos to you, Scott. One of the room members came to Adam and said, how do I know when it's time to get out of the trade? Like I'm in the trade, I've sold, wherever it was we sold from, back here somewhere. How do I know I should either hold on or get out? Well, that was part of the reason for the Geiger counter as well. So here when the Geiger counter is getting more bullish, if I've sold on the Eagle, okay, then that's time now to get more aggressive with your stops, right? Get those stops in there, protect your position. And that was part of the logic behind the Geiger counters, to give you some intel as to what's going on behind the scenes. So you see, we had a little bit of a bullish run through here. Now we're getting bearish again. Oh, here on the Raptor, we were also generating a sell signal right here. Seeing the Geiger counter dip lower, the needle full on red, the trend indicator red, all that would give me confidence to try to sell this signal, which happens to be a double pullback signal. It comes out of there, prints a signal. Like I said, it's a way of looking behind the scenes, gives you a little bit of intel. And yes, Phil, the white line is an average of your time and sales. See, so there's always a little bit of a lag. So when we get this push lower here, I suspect that we're still going to see this tail off somewhat. But let's say we're in this trade from here. So we probably have our stops above here somewhere. Let's see, we'll use our stop strategy. Okay, our stop strategy is right here. Our Geiger counter is getting a little bit more neutral. Nothing to worry about just yet. But if the Geiger counter starts turning green and my stops aren't at break even yet, see how there's that little bit of a lag? We had all this selling here, and now prices are just kind of drifting a little bit lower. But what I'm waiting for is if this needle starts to get green, or we start drifting into the green histogram here, that would be a clue that maybe it's time to start rolling my stops. You see, we're still full on red. Look at that. Big selling here. Okay, now we're starting to get a little bit of a spike. We'll see whether that's some buyers trying to fool some sellers. No, not yet. We're still full on red. Okay, the trend indicator turning slightly. Again, my stop strategy is right here, but we'll see if the needle gets greenish, then that will definitely be my cue to run the stops in a little bit tighter. All right, still red, still heading lower. Look at that go. Yeah, look at this. The Geiger counter still buried in the red zone. That's very bearish. Very bearish. Okay, now the needle's getting a little bit more neutral. And like I said, if it starts to get green, well then that's telling me that the market parameters have changed and maybe it's time to get those stops in. If I don't get taken out on the stop strategy first. Okay, so you see now we're getting a little bit more bullish on the needle and the histogram. That's suggesting is if I was already short on this position, and let's say I didn't have a stop strategy in play, okay, now the needle's green, it's a good time to start rolling my stop in. Maybe bring it in above the high, try to protect as much profit as I can, and there I would have been stopped out. So that's the logic behind the Geiger counter and a real quick overview of how it works. A useful little tool, and like I said, it's on special this week. So we had to be a little bit patient, but a couple decent moves this morning in the NQ after a little bit of thrashing about. And it looks like our crude, natural gas. I was bringing natural gas over for you. 1 second. We'll take a look at natural gas, and then I think we're going to call it a day. Yeah, the natural gas actually fairly choppy today. This is natural gas on the hawk. I'm just checking the daybreak lines. Okay, you see how the daybreak lines are coming here? They're a little bit too close together. So we're going to need to use the alternate settings for natural gas, namely our 446 settings. Just a moment while I let those load. Okay, so here's natural gas on the on the hawk with the alternate settings. Still very choppy today. Lots of yellow bar clusters. We did get a first micro-macro cross signal here. No, looks like it was enough to at least hit our profit objective. Let's take a look at the Falcon. Early trend change signal here. The tip-off would have been the test of the extreme. Proper trend change signal came right here, right on the median line. It's kind of difficult for you to see. But good follow through on that. And last but not least, let's take a look at the Eagle. No real signal on the Eagle today. We did get a red bar buy here, but it was against the band, so I would not have taken that signal off of the Eagle. But it looks like we did get an opportunity to catch it on the Hawk and the Falcon. So, yeah, natural gas, I should pay a little bit more attention to it. It can be a big mover like crude oil. It can make some substantial ranges. I don't know offhand what the day trading margin for natural gas is, but you'll have to check with your broker on that. All right, you guys. Oh, well done, James. Jim says he snagged 50 points on the Dow Jones. Well done. And that seems like a great way to end this morning's session. Remember, tomorrow is our public trading room. We're going to be meeting in the other venue. And I will see you guys then. Bye for now.